All right, how's it going, everybody? Thank you for watching Resource Talks. Today, I have a bit of a different episode because I'm talking to Paul Schubeck, the COO of EMP Metals, but not before I've warned you that this company has paid me to conduct this interview. And you should understand that this channel is a business that makes money by producing and publishing content in various forms. This means that you cannot rely on this video for research, and you should treat it as entertainment instead. You should also be aware of the fact that the mineral exploration, development, and mining industry is one of the toughest businesses out there. It's a very tough business to deploy capital in. Losing money is the norm and should be the expectation in this sector. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including geopolitics, macroeconomics, commodity prices, and more. And it should not be participated in by non-experts. Moreover, these companies are typically in the pre-revenue stage. They don't have sales. They don't have money coming in other ways besides financing, typically on the public markets. As a general rule of thumb, you're better off understanding that all company communications, albeit this interview, their website, their presentation, their social media accounts, and everything that these companies do is intended as marketing. And although I do not make buy or sell recommendations because I obviously have no idea what I'm doing, but also because there is a clear conflict of interest given the nature of my business, many out there will do exactly that. And you should be aware of that inherent bias, and you should be aware of that happening. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're consuming any type of company specific content, albeit on social media, albeit on YouTube, albeit on a company's website, or even mainstream media. It is safer for you to approach it with a dose of skepticism and assume that the party telling you about it is biased, is either getting compensated or owns exposure to the company, because there will always be a bias in a certain way, again, albeit disclosed or not. The fact that I have no idea what I'm doing should already be clear to you at this point. I don't have a long enough track record of consistent investment profits, so I should, under no circumstances, be considered an authority on any of these things. I am not saying this to try and be funny. Although this may sound amusing to you, it is not intended as a joke. I'm not pretending to be humble. I'm simply pointing out a fact and warning you not to rely on anything I say or do. Unfortunately, at least to my understanding, nobody out there has special abilities. The guest who is here likely as part of their marketing campaign does not have any superior knowledge, and they cannot know what's going to happen in the future. They don't know what will go up, what will go down, or what's going to go in circles. And none of us know whether any of the company's activities will result in a success. Again, given that we're talking about high risk, typically very early stage activities. Also, unfortunately, try as I may, I am not always going to catch all red flag or challenges with the company. So even if I end up asking a few tough questions, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I cannot guarantee the quality of anything presented in this video. This is all to say that you should not blindly trust me or anybody on the internet, and you should do your own research. Charlie Munger actually has a great quote about speculating in junior mining startups. And although his quote was not specifically about speculating in junior mining startups, it is very fitting. And he says, quote, "If you don't understand it, don't do it," unquote. I understand this is a long warning, a long disclaimer, but it is actually important for you to understand what's being said and written in here, because no guarantees can be made about future events. And past performance is, of course, not a guarantee of future results. What you will find a lot of in here, though, are forward-looking statements. Pause the screen and read the warning that you see in order to better understand what those are, because this is a conversation that is general and impersonal in nature, containing hopes for future events that may or may not take place, again, depending on many different factors. Before continuing on, please talk to a professional licensed investment advisor with a good long-term track record, as well as do more research before taking any decisions by visiting setterplus.ca. That is where you do research. It is not on social media. You cannot do research on YouTube or social media or investment blogs or chat boards. You go to setterplus.ca, and that is where you'll find the company's official filings. If you don't do that, you're not doing research and you're highly likely to lose your money. If you didn't have enough time to read the disclaimers shown on the screen as I was talking, or if you didn't understand them, you should not be consuming this content because you might be putting your capital at risk. With all that said, I can actually kick off this interview with Paul Schubeck, the COO of EMP Metals. We're talking about DLE, which is an acronym for direct lithium extraction, and just generally lithium production from non-hard rock and non-evaporation pond deposits, if you will. And Paul, these alternative lithium mining methods like DLE, they are often promoted as a faster, more efficient way of extracting lithium. And I want to talk about and try to challenge maybe some of these assumptions later on in the conversation. But my questions here start with the lithium market itself, because just today I saw a report from UBS showing that both rising output at new mines and the expansions at existing mines have put the lithium market in an oversupplied situation, which they expect to continue through 2027. So before we even get to talking about DLE and how it works and all that stuff, the question here really is, do we even need it in the first place? Because we seem to be able to supply lithium without it just fine, and even too much at this stage. So do we need DLE and alternative lithium extraction methods?
Yeah, I think it's a good question. When we consider DLE, I think, from a supply standpoint, it's more than just supply of the material. You look at DLE from a greenhouse gas emissions perspective, from a sustainability perspective, the speed to bring on a brine related lithium resource. There's some advantages there that I think, really allow us to shift and look to DLE as a potential alternative that could potentially disrupt our typical ways of mining lithium today. There is, again, the conventional hard rock mines today that are operating. Some of these projects and some of the newer projects that are out there from a hard rock perspective, they do take a long time to develop. Solar ponds as well, long time to actually get lithium extraction. Versus we see these brine projects as sort of low cost, low greenhouse gas emissions, no surface brine ponds, no surface tailings being generated, or having sort of tailings stored on surface. So we really look at these as a quick, efficient way to bring production into the market. And with just rising demand too, I think overall, EVs are continuing to build momentum. We've got other, energy storage related solutions that are coming online as well, or being considered. So I think demand will continue to grow, and some of these newer brine projects will be there to help support the future demand of lithium.
Because essentially, I understand you're saying this is not so much about increasing the overall supply of lithium, but figuring out different ways to produce lithium, especially if it's more efficiently and more effectively, if you will. It will increase supply, right? Therefore, putting pressure on the price if demand doesn't materialize in the way you might expect it. So in your case, with EMP Metals as an exploration company, are you not kind of shooting yourself in the foot by developing new supply ways, or how do you see that internally?
Yeah, and I guess, where we are today in terms of development, I mean, we are still a few years out to actually bringing any meaningful production online. So, even when you look at reports today, the price that's been depressed here from the recent highs a few years ago, I mean, we are starting to see a lot of projects either not move forward. We're starting to see that's supply that is out there start to come down because, again, costs are too high for the pricing environment that we're in. So I think that really brings an opportunity for some of these more efficient extraction methods, lower cost methods such as DLE, which again still has to be proven at more commercial scale. But I think there's an opportunity there for DLE to really disrupt the traditional conventional ways that lithium is brought to market, and start filling in some of those gaps with some lower cost, more efficient, more sustainable type products into that raw material.
I do want to talk about the time perspective of it all, and not only in your case but DLE as a whole, and I hope we'll get to that maybe somewhere in the latter part of the conversation. And I'm by far not well familiar with the subject of brine extraction of lithium, so I probably won't be able to provide enough pushback on any of the assumptions here. But what I've seen so far is that DLE works on small scales, so lab controlled environments. They, you sometimes get good tests out of that, and that's all nice and well. But then once companies try to scale it, it becomes more challenging. Is that a challenge that's solvable in the first place?
Yeah, I think it's not just a matter of if it's going to happen, but when it's going to happen. I think we're starting to see some of the bigger major oil and gas players start enter the DLE space, and again the DLE really complements their existing oil and gas operations, and some of those big players I'm talking about. I mean, announcements from Equinor getting involved in the Standard Lithium project in the U.S. ExxonMobil also getting involved in the Smackover with the acquisition of the Galvanic project. So I think once you start to see some of these bigger players get in, I think that's going to help drive the technology piece and really allow for some of that scale to start to happen. I do agree with you. It's really easy on a bench scale, to take go from brine all the way through your entire flow sheet to a battery grade lithium carbonate. And then once you do start to introduce, higher flow rates, things do become more challenging. There's definitely some work to be done there. There'll be some learnings to go through that as well. And really, I guess when we come to look at it as a whole, and when we look at Saskatchewan particularly, where we're developing our project, we've got this great infrastructure. We've got this great, technical support from an existing oil and gas industry that's been developed over the last 50 years. So I think, a lot of those technical pieces and the transition to get from pilot scale all the way to full scale, we've got the initial building blocks set up here in Saskatchewan, and we've got a really good high quality brine as well to allow that efficient extraction through to a lithium carbonate product. So I think it's just it's not a matter of if, it's a matter of when some of this DLE and larger scale operations do become more prominent throughout lithium and supply that material.
You're mentioning the larger scale, and that also reminds me of, yeah, you're right. So oil companies are going in. I saw an ad from ExxonMobil a while back, a couple of months ago, about DLE. So it seems like large oil companies are going in that direction, or at least some of them. But Paul, besides them having more experience in drilling, fluid handling, chemical processing, community relations, and everything that I hope we'll talk about later today, they also have much deeper pockets, right? When it comes down to bidding for technology partnerships, for example. So how do you see the DLE business specifically from the perspective of who should be involved in it? Is it a business that's better left to the bigger companies, or do you think it's a business where smaller, more nimble companies, if you will, could do better?
I think there's advantages to both, and really, where I see EMP fitting into this initial development is really, again, you mentioned it. We have the ability to move quick. We have the ability to be nimble and agile, change direction and pivot if needed, whereas some of those larger companies are a lot slower to develop these projects. So I see, for us initially, especially on the DLE side, I see EMP fitting that, ability for us to move quick, to try things, to bring in the initial capital to do the exploratory work. And then I do see at some point there could be transitions into the larger companies when we start to look at, bigger operations and some of the larger tonnage outputs that some of these bigger companies have already been announcing, 20, 30, 40,000 ton per year facilities. We're talking, multi-billion-dollar investments in order to bring those projects online. the other side of this too, when we talk about being small and nimble, and really where we see the advantage of our Saskatchewan-based brine and the absence of H2S and oil, we can really look at smaller projects to actually get into a commercial meaningful production. And so we're really looking at facilities that could range from 1,500 tons per year, 3,000 tons per year, and that is more manageable, lower capex costs that we could as a company of EMP actually take through and build a facility of that scale and size. So I think there's a room for both. There's a room for the smaller pieces off the initial start, and then as we get into these larger developments, I do think that's where some of these larger ExxonMobil, Equinors of the world, they come into play on some of the larger scale production.
Is there a lot of competition for technology partners though? Because essentially you do have to partner with someone on the technology side. So is there a competition, especially with pressure from the larger companies?
Yeah, there is a lot of tech providers out there for sure. When we look at the pathway that EMP has taken, we evaluated 10 plus companies initially, and then really invested some dollars into who we felt were the two top tech providers. We made a decision early on that we weren't going to develop our own technology in-house. We were going to let the Coke technology solutions of the world, or the ESMs, Iliad technology of those guys. We're going to let them figure out the DLE tech piece, and really find the tech that's going to work the best for our brine, and implement that into the flow sheet. So we've made that decision early. We weren't going to develop the tech, but there are the tech piece is ever changing. There's always new technology coming out. So I mean, I think at this point, we've sort of partnered or narrowed our vision down to two main tech providers today, but still have an open mind going forward as this entire development continues to develop here in Saskatchewan, that there could be another DLE tech that does get inserted, could be on a future facility, could be in a new project area for us, but at least keeping an open mind as the tech piece continues to evolve.
You mentioned our brine, which is actually reminding me of something that so far we've kind of talked about DLE as a one-size solution here, if you will, but it's not, right? And as far as I understand it, brines differ significantly in composition depending on their location, geology, and so on and so forth. So how can DLE be developed at scale if the process itself cannot really be commoditized, because it has to be personalized essentially to each individual brine?
Yeah, and each tech is going to have certain requirements of that brine coming into DLE. So it's really matching the technology, your impurities you have on the front end, what needs to be removed prior to DLE happening. I do think that regardless of what DLE technology is in there, there's a variety of pretreatment steps that need to be done. And it's just how many of those pretreatment steps do you need to do to become economical to get into DLE to begin with. So again, each DLE is going to have different specs. As long as you're hitting that spec, getting into DLE and making sure that that resin is compatible, the DLE process will take over from there, and then you've got your downstream refining as well. So it's matching the tech with the brine, but also what do you need to do to your brine prior to getting into DLE, and that's where a significant amount of cost comes. And when I talk about contamination, H2S, oil, those are big cost items to remove prior to getting into DLE. And so when we talk about Saskatchewan-based brine, having the absence of those two contaminants alone are a major cost savings, both on the CapEx, OpEx side for our operation.
When you talk about contaminants, I suppose, again, not at all well versed in this topic, but I suppose you're talking about magnesium or boron, for example, that would get into the process essentially and kind of create issues that way. Is that something that happens a lot?
Yeah, I mean, you're going to have a varying amount of impurities or contamination in each brine resource. The levels of sodium, levels of magnesium, calcium, et cetera. Those are all things that need to be factored into, essentially the recovery of lithium. But some of the other problematic ions, again, hydrocarbons, organics, iron, boron, silica. These are all things that can cause some issues, especially through the water treatment equipment that is happening downstream in order to concentrate up your lithium to do the extraction. So it's a combination of everything. I mean, every brine resource is going to be a little bit different. Again, temperature comes into play. There's all these little differences between every resource. So in terms of one DLE solution fits all, that's not necessarily the case, and it's just how much pretreatment do you need to do before DLE, and then how much cleanup after DLE do you also have to do. So it's yeah, you got to look at the whole picture and look at everything in that brine to understand how efficient and what your costs are going to be coming through your entire process.
How much cleanup you have to do after DLE is a good point, actually, in the conversation to talk about what happens after the process, too, though, right? Because after extracting the lithium, you're left with essentially chemical waste, is what I would call it, or concentrated brine. And again, I'm barely scratching the surface here from a few articles that I've read about DLE online. But so maybe you can explain it better here. What is left in the end after the lithium is extracted? How hard is it to deal with that waste, and where does it go?
Yeah, so when we talk about, going through the DLE process, DLE does a really good job at rejecting a lot of those impurities. And what we've seen through some of our piloting programs is rejection of, 99% plus of everything else in that brine that you don't want in your downstream flow, in your downstream process. And so the initial cleanup that DLE does, again, all those impurities, they stay in solution and they get injected right back into a disposal zone. So we're removing a ton of that contamination or impurities prior to getting into our downstream concentration steps. And as we go through concentration on the back end in the throughout conventional water treatment equipment, that's where we will get some contamination that comes out as solids, which would just go to a typical landfill. So in terms of hazardous materials coming off the process, a lot of our impurities again are staying in solution and getting injected back into a disposal reservoir, and then we're able to concentrate our lithium up throughout the downstream process, but take some of those impurities out, through different polishing steps, carbonate or softening steps, and creating a filter cake, which ultimately just goes to a conventional landfill.
Hmm. This also reminds me that if I understand correctly, once you define a resource in hard rock lithium, the level of certainty about what you can extract from that ore body is higher than the level of certainty you can realistically have about converting brines into battery grade product because of the variability of the brine based ore bodies, essentially, right? Or in simpler terms, what I'm trying to say here, because I'm getting lost in my own words, the predictability of how a hard rock lithium deposit behaves is better than that of brine based deposit. So is that something you can deal with, and how can that be dealt with at scale?
Yeah, so I guess can you provide some more clarification on the variability on brine-based reservoirs and how variable they are?
Yeah, so the composition, I suppose the chemical composition of the brines could vary in different spots of the deposits, as far as I understand it.
Yeah, I mean that is correct when we look at our overall land base, and that's the reason why we've done so much drilling on our lands. So in total, I think we've got 10 wells that we've drilled and tested, just trying to further expand our knowledge of the reservoir and confirm concentrations, total dissolved solids of each at each location and each of our members that we're targeting for production. So we're slowly building a more larger database to help provide more confidence in the overall resource assessment. But we do see some variability in terms of some of the initial test holes that we've done, plus some of the 10-kilometer step outs that we've done, there is some variability between the zones there, which again, we'll have to factor into the overall development strategy of the subsurface.
What is the drill spacing that you typically need for something like that?
Like to provide more confidence?
Yeah.
Yeah, it really comes down to what your qualified professional is comfortable with. And I think you'll see a variety of different projects, either through a PEA stage, a PFS stage, and have a variability as to, how many holes they've drilled and tested, what that spacing is. Like from our perspective, there's no clear definition as to what that needs to be. It really comes down to the qualified professional you have that is essentially performing the analysis and what they're comfortable signing off on. I would say, based off the work that EMP has done here in Saskatchewan, we've drilled and tested upwards of 10 wells. And I think in terms of the drill density that we have, I don't know if there's any other project in North America today, or in Canada, I should say, that has as much data that we have at our hands today to move our resource from an inferred category to an indicated category, and provide more confidence that on the subsurface side.
Why I'm asking that is because I'm thinking about the cost of getting to that point where you actually have a resource, NI 43-101 compliant resource. How much money does it cost a company to get from the exploration stage to it being ready and saying essentially to investors like, hey, this thing is going to work? Because you build a whole processing facility. You want the ore body to be consistent and predictable so that you can keep producing at a predictable pace, if that makes sense.
Yeah, correct. And I would say, that's where I think, when you look at some of these larger tonnage output projects, 20, 30, 40,000 tons and the billions of dollars to build these facilities. I mean, the subsurface you need to be really confident in the subsurface. We've started that legwork again with our NI 43-101 compliant resource assessment. We've put out a PEA with a lot of the piloting work that we've done, and we're continuing to, go further down the de-risking steps. Additional well bores, sampling, all the piloting programs. I mean, these things cost, millions and millions of dollars. That EMP has already invested here in Saskatchewan into this project. But, when you talk about, major investment dollars and confidence in the subsurface, I think, again, with Saskatchewan specifically, we have this ability to take smaller bite-sized capital requirements and look at, hundreds of millions of dollars of investment on some initial facilities, in the 3,000, 1,500 ton per year range, which may not require as much, as much drilling or as much initial investment before, those billion-dollar decisions get made. So you could essentially look at, Saskatchewan with taking some smaller de-risking steps in terms of getting into something meaningful production from a commercial standpoint, and, proving out higher flow rates, proving out DLE, and getting into a saleable product, before you're investing the billions of dollars to expand your production capabilities.
Well, looking at what you've seen so far over in your end, is it realistic for you to get those rates at commercial scales once you move past the pilot testing?
I think it's critical, just to provide investor confidence. That's, I think, the question that we get asked the most is, have you proven the subsurface at commercial scale flow rates? Has DLE been proven at commercial scale flow rates? So I think that's the question everybody is waiting to have answered. I look at projects like the Standard Lithium project down in Arkansas. They have a commercial column in operation from Coke. So, I mean, I think that's a step in the right direction, but it's really taking that single column and scaling it to the number of columns that you need for your entire process. And again, that is going to be dictated purely by the tonnage output that you're requiring. So I think as those steps continue to happen, whether it's EMP that does that, whether it's some of our peers in this space, Arizona Lithium here in Saskatchewan as well, Standard Lithium in Arkansas, whether it's ExxonMobil or Equinor's involvement, I think as long as somebody can get to that stage where you have a full scale or closer to full scale commercial system operating at high flow rates and getting good performance, I think that's going to bring a wave of confidence into some of these other projects that are really just waiting for some of that good news to happen.
I'm also thinking about grade continuity, and so I'll make a note to bring that up. But what I'm reminded of from my last conversation with you guys was the net pay zones, that they kind of show a range of porosity from about 8 to about 14%, if I'm not mistaken. Is that a range like that would be standard at industry levels, or how is that going to develop over time?
Yeah, that's again on the subsurface side from a geological standpoint, high level, we are happy with that here in Saskatchewan. The team that we have with Rock Resources, who's doing a lot of our subsurface development work, they continue to see no issues in our project area with the ranges that we're seeing. And some of the initial flow testing programs that we have run on some of those vertical test wells, we're also currently running through a flow testing program on the horizontal well that we've drilled. So I think there's opportunities on the subsurface to, leverage existing technology and existing best practices from the oil and gas industry and bring that into this new lithium industry, but also limit the risk on, again, if you do run into some tight zones with limited porosity, if with us with a horizontal strategy, you have the ability to open up other areas and improve the amount of surface area you have down in the reservoir to hit some of those higher porosity zones to continue to bring fluid with each well that you drill. So I think there's a variety of different things that can impact that, but we're happy so far with what we see here in Saskatchewan.
It is flow rates essentially that get me to wanting to talk about this, because what I've written down is flow rate sustainable, question mark, aquifer management, question mark, as in managing the speed at which water flows is important if you want to prevent pressure changes and inevitably contamination of the aquifer. Well, it seems to be a difficult word for no reason, but so what does that depend on? That is it the ore body itself, the host, the lithology, something else within the geology, and how does that get managed?
Yeah, it's a good question. And again, here in Saskatchewan with the Duperow that we're targeting, there's just not a ton of well control in the area. So we've got, the Bakken, which is the main oil and gas producing member here in Saskatchewan. It's at about 1,500 meters of depth. Whereas for the lithium bearing reservoir, we're at about 1,800 meters. So there's not a ton of well control, throughout the southern part of the province. So we're creating that database, and we're learning as we go, as we continue to drill new wells, which are going to be critical for us to better understand the subsurface. We've got a couple active companies that are doing a lot of that work initially, but there's still this period of time that needs to happen in order to continue to gain confidence. Each and every test we run is really a significant de-risking step, which will hopefully bring on additional capital to allow us to keep developing the project. So yeah, there's still a lot of work to be done, and there's we're still learning every well that we drill and begin flow testing. We're still learning more and more as we continue to develop this project.
Chemically, how complex is that process, though? I mean, I would assume that this is not an easy job, and you cannot do it with kind of over-the-counter chemicals, if that even is a thing. But so, how complicated of a process is it? What chemicals are involved? Where do you get them? Cost, and so on and so forth.
Yeah, and chemicals just is in what we're using in for the actual extraction.
Yeah, for the extraction process, yes.
Yeah, so again, the DLE tech that we are going to be utilizing is an absorption desorption technology, and the DLE piece itself uses no chemicals. So it's really it allows the lithium ions to attach to the surface of a resin bead, and then once that lithium is extracted from your brine, you simply wash it off with fresh water to then remove it from that resin or from the bead. downstream of that, there is going to be some chemical usage to allow different washing, different cleaning, also the carbonation, et cetera. But those are just typical industrial use chemicals: sodium hydroxide, hydrochloric acid, soda ash for the carbonation. So there's nothing, significant that isn't available today through typical water treatment processes on the back end.
What
Again,
happened?
you got a variety of filters, membranes that are doing a lot of the work for you. So you do have some different acid type washing to either clean resins or clean filters. So there is a little bit of waste generation there as well. But overall, there's nothing that's not available today from an industrial chemical usage that we're concerned about. You may have some upgrading of those chemicals because, again, everything, any ions that are in those chemicals will eventually potentially get into your process as well, which need to be removed, downstream to get a high purity lithium carbonate product on the tail end. So there may be some upgrading or, further refining of some of these industrial grade chemicals to get them to a better quality if we feel the cost isn't there to buy those high purity products off the beginning.
What happens to those chemicals afterwards, though? That's where I wanted to go with that question. And specifically thinking about this from an environmental risk and local opposition really to the whole process because of any chemicals involved, whereas they may not be involved in the direct process that you're in. But oftentimes, especially with local communities, it's kind of obscure and it's tough for people to understand. So yeah, talk to me about what happens to the chemicals afterwards and what you found from a local opposition perspective.
Yeah, so again, any of the chemicals that we're adding in for any of the washing purposes, those will get combined into our waste stream, essentially, that will be re-injected and disposed of into waste disposal zones. Some of those disposal zones today are very typical. And again, when I'm speaking of disposal, I'm talking specifically here in Saskatchewan. With the oil and gas industry that we have operating here today, these disposal zones have been taking fluid, essentially brine after oil has been extracted from the brines. They've been taking brines for the last, 20, 30, 40 years that this oil and gas history has been operating here in Saskatchewan. So, any of our chemicals for cleaning, they'll get introduced into our waste stream and essentially injected into disposal zones downhole.
There's no risk to any local population or any types of life.
Correct. So again, that's when you talk about, a DLE operation. We're not storing anything in brine ponds on surface. We're not storing tailings on surface. The majority of our process, everything is staying in solution, in piping, coming up from the reservoir and then getting re-injected into some of those disposal zones that we have available. And we have a variety of, industrial operations already in the province, the oil and gas industry being one, but there's also a few different solution potash mines here in the province as well. And again, these types of operations have been injecting into these disposal zones that we also have available in our project area, for the last 50, 60 years that these facilities have been operating.
Well, why I'm asking you this is, again, because thinking about communities and how receptive they might be to it, are there any specific requirements for community consultations beyond what is typical for Saskatchewan?
Yeah, and we've already started a lot of that process already. Engaging with the local rural municipalities that are in our operating area. So we've started those conversations just to keep them informed of what we're doing, what our timelines are, what the process is. Again, they're curious, they're interested. There's a major economic driver that comes with any new resource industry. And again, where we're operating is right in the heart of oil and gas country, in the Bakken oil field. So they understand the impacts and the job opportunities that are there as well. So they're very, very eager to learn more about our process, understand, what they need to do to get ready, and also what some of the complications might be. So we're already having those conversations today. And really it comes down to, the permitting process, the regulatory body that's in place here in Saskatchewan, meeting all of their requirements with any of our applications before we can actually begin any construction or drilling activities, or any injection activities as well. So, everything again that we get to lean on that's been sort of developed with the oil and gas industry, because this industry is so comparable in terms of how it operates. We already have framework that's been, refined and massaged over the last 40, 50 years that we get to sort of leverage as we bring in this new industry into Saskatchewan.
Well, what about it from a national permitting perspective, though, and specifically in the context of timing? Because, and you and I have been talking here for what, a half an hour or something along those lines. And I tried to read up on this before our conversation and took a bunch of notes. And I'm still very far from wrapping my head around even the basics of the process, let alone being able to take a decision at the permitting level. So applying for extraction permits, does it typically take longer than it would for an evaporation pond or a hard rock lithium operation?
Yeah, and so when you're talking about timing there, again, my comment on leveraging the existing oil and gas regulations that are in place really allows us to move quite quickly through the permitting process. I also mentioned, smaller facilities. We're really designing our facilities to sort of fit within those oil and gas regulations in terms of, total flow rates that are going in and out of these facilities. We have facilities that are operating at very similar flow rates, water handling facilities here in the province already. So again, the government and the ministry is already comfortable with a lot of the operations that we're proposing. And that's why I think you'll see, sort of smaller pad designs rather than these mega projects here for lithium, specifically in the southern part of the province. If you get into a larger mining operation, again, I don't know exactly the timelines to get through those permitting steps, but you hear timelines for some of the hard rock mines, 7, 8, 9, 10 years before you're permitted or have infrastructure to the site. We're really have a bit of luxury here in the southern part of the province, staying within the oil and gas regulations. Like, we could be weeks to months to get permits approved for us to start constructing a small scale facility here in Saskatchewan.
Is that on an assumption, or I mean, I suppose, is this forward looking, or is that something that can go through?
It's definitely forward looking, because we have not, until we can nail down, what our first facility is going to look like we will be going through those permitting steps. But we do have peers here in the province that have been working with the regulatory body for the last few years as they sort of, frame in what their initial facilities are going to look like. And so we already have, examples of people going through, or businesses going through that process today. And we do expect here in the next, few months, as we sort of nail in what our first step is going to be from a more commercial de-risking step to start getting permits in place. But again, we have really good relations with the local government. We continue to stay engaged with their processes as they look to industry really to help provide feedback into the regulatory body that they're creating for lithium, specifically here in Saskatchewan. But as of today, we default into the oil and gas industry, as well as we have some potash comparables with the solution mining from a potash perspective here in the province as well. So again, we have existing industry, an existing resource industry that we can leverage in order to have some initial framework until a lithium specific is released.
Why I'm asking about that is because I'm thinking again about timing, and why I'm thinking about timing is because I'm thinking about cost. And cost, of course, is something we do need to talk about. But when it comes down to DLE and both on the OPEX but CapEx as well side is what I want to touch upon, because in a nutshell, they both don't seem to be close to being competitive on a cost basis relative to what companies running evaporation ponds are getting. So I understand your argument on the hard rock side, but then come in evaporation ponds. So how do you solve that OPEX cost challenge relative to your evaporation pond, specifically in low cost countries like or jurisdictions like a lot of the work that's happening in South America, for example, is very low cost on the OPEX side. So yeah, how do you solve the DLE cost challenge, if you will?
Yeah, and I think if you were to look through our initial PEA that we've put out, we do have a very competitive OpEx and CapEx in general for this project. And I think that really comes back to, again, brine chemistry and your efficiency to move throughout your entire flow sheet with limited equipment or limited processes in order to get to a finished product. So when we look at OpEx specifically here for Saskatchewan-based brines, we're just over $3,000 per ton US per ton OpEx, which we think is pretty incredible and competitive globally, given where we're sitting. So we, again, really leveraging the advantages of the Saskatchewan-based brine, the ability to look at smaller scale facilities, 3,000 tons, 1,500 tons per year, really limiting the capital requirements to get into a facility like that. Again, we're talking hundreds of millions versus billions for the larger mega projects of 20, 30, 40,000 tons per year. So I think those give some significant advantages here in Saskatchewan and really allow for a DLE project here to be developed.
Those numbers that you referenced from the PEA, I think it's 3,300 if I remember correctly, based on the last conversation. But that was done. The PEA was done at much higher lithium prices. Does the level of where the lithium price is, that probably influences what you deem economical and what you don't deem economical. So that would potentially have an effect on your OpEx, if I understand it correctly.
Yeah, and so again, the PEA was done with a flat deck of 20,000 US per ton lithium, which again, at the time the PEA was developed was relevant. We have seen that pricing come down and settle out at 11 to 12,000 per ton today. We do see that long-term projections and any analyst coverage that we've reviewed, everybody is talking that 20,000 ton dollar per ton mark is very likely that we're heading back there and stabilizing there or above. So we're, for the PEA numbers we have today, if we were to run those economics, things would be different. But we do see, long-term projections plus our time to actually bring something into production. Again, we're anticipating some pricing increasing here over the next few years as demand continues to grow. And some of those higher cost producers and projects, for that matter, continue to come off the table, just due to, again, the low pricing environment that we're in today.
If it doesn't increase, though, and I know that's a scenario that not everybody likes talking about, what does that do to your cost? Like if lithium stays at 10, 11, looking at the ore body that you have right now, and I know this would also be forward looking because that's not what's in your PA, but what would you guess that does to your extraction cost?
Yeah, I think from an extraction cost, it's going to come down to how many tons you're going to produce. The project economics overall aren't going to look as attractive with a lower pricing environment. But at the end of the day, it's going to come down to, what is your OpEx, and the lowest OpEx producers are going to continue to produce product. There's going to be some demand out there, and if you're below, if you can sell it for more than you're making it, you're going to be continuing to operate. I think a lot of the resource industry in general, there's cycles that are happening, and as long as you can keep your operating costs as low as possible and be a lowest cost producer, you will continue to run and continue to operate your process. Effectively, that is our goal here with EMP, and considering again the quality of brine that we have, I think we'll have the ability to still be competitive even in low pricing environments. And we hope that the market recognizes that as well too, and allow us to continue to develop this project. We do think that there's opportunity for Saskatchewan to be a significant contributor of lithium in the overall global market.
Hmm. A lot of what we've talked about today is, as far as I understand it, coming again from preliminary tests, both yours, but also just looking at the industry and what we've done. And it sounds to me like, if possible, again, it will still take some time to figure it out at scale. You mentioned that at the beginning as well. how far away in the future do you think this process, DLE as a whole, is from working at the commercial scale? Like how many years away is it?
I think in the next 12 months, we'll see some significant steps and de-risking around DLE. Whether that comes in the form of demonstration plants that are up and operating at scale, whether that comes in, some of the companies that are already have commercial columns in service, that they continue to make, further strides to de-risking that overall tech. But I do think, sort of in the next 12 to 18 months, we should see some significant advancements and ideally some significant de-risking around DLE specifically.
Where do you think that de-risking is going to come from? What part of the industry specifically? Do you have a company in mind or a specific technology provider, specific technology? What angle of the industry do you see it coming from?
Yeah, I think it's going to be from, a combination of, again, you're going to need a resource and you're going to need a tech provider. And again, whether it's a certain tech provider that can get there sooner than another, again, I don't have that foresight today to say that it's going to be one specific company, but I just think in general, if there is a DLE technology that's working at scale, I think that'll bring, a ton of confidence into the DLE space for lithium.
How expensive is the R&D process for DLE? And what does that really look like? Trying to figure it out between going from working in the lab to working at scale. What exactly is that process? How expensive is it?
Yeah, I mean, some of the pilot programs that we have run, again, we're talking, millions of dollars of investment to go from, brine resource. Again, that's, putting in all the infrastructure to get to the resource, going through the DLE pilot programs, and then actually doing the conversion on the back end. So talking millions of dollars. And, where I think, EMP has been efficient in this whole, development strategy is that we didn't decide to create our own technology. I think there's been, a few companies in the space that have started down the technology development side, but are now switching over to more, commercially available technology from some of the bigger providers. So, by us, focusing on what we're good at here in Saskatchewan, which is really the drilling, the identification of the resource, understanding the geology, and then leverage, all the other technical expertise that's out there from the DLE perspective. Again, we're leaning on vendors to provide that, and then even on the downstream refining side as well. So relying on vendors to really provide those pieces of the process. I think we're just a lot more efficient with our capital, a lot more efficient with our dollars to get, through the entire flow sheet and prove that our resource is capable from going from lithium extraction all the way to a lithium carbonate on the tail end.
It does make it more expensive, though, I suppose, on a per pound basis. Eventually, what's that impact? And I suppose you've done a cost benefit analysis on this, so maybe you will know this. But yeah, what's the impact on a cost basis from doing it yourself versus going for a third party provider?
Yeah, I think there's always if you're doing it yourself, there's always the possibility of, you got to keep spending money until you solve that code or crack that code. Whereas if you go to a vendor-based technology, every vendor is going to have their own sort of structure into how, commercial development gets completed, whether it's licensing, royalties, et cetera. So there are those costs associated with it. But with that, you also remove all the risk of that technology, of that technology performing as it should. And so, when we look at a vendor, you're adding in performance guarantees, you're adding in media guarantees. They're basically signing a document that will say this process will work given that the conditions are met on the front end. So, if we can, again, focus on what we're good at, which is essentially the resource extraction from the subsurface, and get that into the refinery, we remove a lot of risk from EMP side, not having to also, worry about the technology piece inside that refinery, but having to pay a license fee or a royalty fee, or just, again, purchase the equipment. I mean, there's the added cost there as well. So.
Good. I think I'm getting a better idea of DLE and some of the moving particles, but that's definitely not everything. What am I forgetting to ask? What else is important when it comes down to this process?
Yeah, I think again, just how how sensitive the process is to contaminants. We're learning a ton here as we continue to go through our piloting programs. But again, it is a complicated process, and it's in terms of understanding what your brine is really critical to understanding how your extraction methods are going to perform, as well as what the downstream equipment requirements are going to be. So I think overall, when you look at Saskatchewan-based brines, the high quality, high purity, relatively good concentration, the highest concentration to date found in Canada on our land base, I think are really important for us to efficiently get through this process, have a efficient downstream refining process, and efficiently get to a battery grade lithium carbonate on the tail end. So I think again, Saskatchewan is set up quite well, and positioned quite well to be potentially one of the first and a major contributor for lithium products here in the future.
I hope you'll keep giving me updates over time as the process develops and as things keep moving in the lithium industry. But thank you so much for your time today, Paul. I don't think I have anything else. Anything else you want to add here at the end?
No, I don't think so. It was good. Enjoy the chat.
Thank you so much for your time.
Yeah, appreciate it. Thank you.